Hi, good day to all. This is Calvin here. Welcome to this weekly edition of the weekly technical outlook on the major stock indices. So before we start, I would like to highlight that this week will be a pretty pivotal week on the global stock market. Why? Because on this coming Wednesday, which is April the 14th, the US stock market will kickstart its Q1 2021 earnings season, starting with the major US banks or financial institutions such as Goldman Sachs, JP Morgan, and Wells Fargo. They will all report their respective earnings numbers before the start of the US stock market this coming Wednesday. So before we start, let's take a look at the disclaimer slides first. Alright, so before I jump into the latest technical configuration and the key levels to watch on the major stock indices, let's have a recap of last week's performance, which is 5th of April to 9th of April versus their respective prior week's performance. So as you could see, especially the US stock market, the major indices, the S&P 500, the Nasdaq 100, the Dow Jones Industrial Average, all actually posted pretty solid performance last week. And what's most important is that the S&P 500 managed to actually surpass its prior week performance as well as its average prior 4 weeks performance. That means the 4 week average in the previous 4 weeks. And what interesting is the Nasdaq 100 previously was a kind of an underperformer. It actually now starts to shape a pretty much strong or decent rally as well, and they in fact outperform the rest of the US major indices. But bear in mind that later I'll share with you all, there's still some technical configuration that actually showing a bit of hesitance at this juncture. Later I'll jump into the more detailed technical configuration on the Nasdaq 100. So pretty much strong performance last week, 3.87, surpassed its previous week performance as 2.7, and its average previous 4 week average, which is at 1.29%. And what's pretty underperforming will be the small cap stocks, which is the Russell 2000, still below the prior week performance at 1.46%. It actually last week shaped a kind of a minor loss as negative 0.46 and also below its prior 4 week average at 0.78%. So still pretty disappointing numbers on the Hang Seng Index and the Hang Seng Tech Index, which is related to the China stock market. So what we could see is that performance-wise, is still below the 4 week average on the Hang Seng Index, which is last week it shaped at negative 0.83%, a kind of a more shortened week because last week on the Hang Seng Index, it actually only managed to reopen after the after the Easter holidays and the Qingming Festival, which is on Wednesday. Yeah, you only open on Wednesday, so pretty much a short trading week. So I would like to see this coming week, which is we're able to see a more of a better picture on the China-related stock market. All right, then no pretty much changes in the Nikkei 225. Pretty much minute performance last week, almost no change at negative 0.29%. Kind of a below also the prior 4 week average at 0.87% and its prior week, which is at 2.32%. So then the German DAX over here is seems to the recent outperformance of the German DAX seems to have been more or less subsided at this point in time. 0.84% last week, but still managed to actually hit a kind of a record all-time closing high during the towards the end of yesterday, last Friday European session, slightly below prior week return at 2.43% and its prior 4 week average at 2.08%. So later I'll share more on the German tech, the German 30, we call it the German 30 index on its technical configuration, whether it start to show signs of exhaustion from here, given that in terms of raw percentage numbers, the last week performance in term or upside momentum seems to be a bit subsided if it compares to the prior week and the prior 4 week average. So now before we start on the individual major stock indices, let me shift through our platform first. So let me share with you a particular growth proxy index, which is the SOX index, SOX XX in short, the ETF listed on the US stock exchange. So why do I like to look at this index? Because it actually give me an indication of kind of positive feedback loop in terms of global economic growth, be it in terms of demand, or because right now we know that recently there's this supply issue as well on the global semiconductor chip industry, where almost the whole world is short of semiconductor chips to actually be manufactured in computers or even in smart cars or smart TV. So, but all in all, what I could see is that prices is still pretty much intact, even though it's more of a supply side issue rather than a global demand. Yeah, there's definitely a global demand for this semiconductor chip right now, but definitely in terms of the positive feedback loop, or the positive uptrend that is intact, or the major uptrend that is intact for these semiconductor stocks in place since 18 March 2020 low, has been also reinforced by this lack of supply in the semiconductor chip industry. So that is actually having a kind of a positive or added positive feedback loop into the price section of this semiconductor ETF stocks index. So all in all, what I could see is that there's no signs of exhaustion yet. Daily RSI momentum is still pretty much positive. All right, still trading a series of higher lows above the 50% level, and hasn't even reached the overbought region yet. So what we could see over here is that it's now coming very close to a first resistance, or the target at 458 that we have for a couple of weeks already. So what we could see over here is that as long as this key support level at 39250 holds, potentially it could actually solely evolves in a kind of a bullish impulsive sequence to actually target the top of the channel coming in at 495 level. So with that kind of a positive configuration on this SOX ETF, what it translates, it means to us that there is a high chance or high probability that the global stock market or the global stock indices, we are not in the phase of a major distribution yet. It's either sideways depending on which of the geographical region that you look at, and to potentially further upside to see higher highs for on the global stock indices. All right, so now moving on to the SPX first. So let's start off with the daily chart on the SPX. So on the daily chart of SPX, very nicely is still trading above the lower boundary of this major ascending channel support in place since 24th of March 2020 low last year, which this actually depict our ongoing or current major uptrend phase. No signs of exhaustion. RSI, yes, hit the overbought level, but hasn't hit the extreme overbought at 76, and also below its previous. Okay, let me share with you. Oops. Okay, below it still has some more room to hit the previous peak of 2nd of September 2020 at this 82 level. So all in all, still no signs of a medium term kind of a upside momentum that is kind of easing off, still pretty much intact. So what we could see over here is that eventually the next significant resistance will be at the 43 level, 4300 level, which is the Fibonacci expansion level of one time. Okay, taking off from here, and right now the support level is coming in at 3980, which is the lower boundary of this ascending channel, as well as the rising 50-day moving average as well. So what we could see on the strategy chart, which is the 4-hour chart, if we could recall, last week we have a target or upside resistance at 4120, which more or less has already been hit, because on last Friday it actually had a high of 4129. So what we could see on the shorter term RSI, especially the 4-hour RSI, is actually hitting this extreme overbought region at 77. So right now is intending to actually exit from this overbought level. So what we could see is that in this short-term push-up in the last week seems to be a bit overextended, hitting the 4120 level, and also very close to the upper boundary of this short-term ascending channel for 5th of March 2021 low. So potentially what we could see is it could actually start to do a bit of retracement back down towards the 4060 level. So what's 4060 level is actually the previous minus swing low of 6th of April, and if we could share with you, it also correspond with a 38.2% retracement from this minus swing low or of 26th of March 2020 low, taken to the current all-time high at 4129. Okay, pardon me, stock is 23.6%. Yeah, 23.6% retracement. So what we could see is that as long as this 3980 key medium term pivotal support holds for this week, I tightened the key medium term pivotal support for this week to at 3980. Eventually, after this potential pullback, we could see a further potential upside to target the next resistance at 4200 slash 4220 level. Okay, now then moving on to the Nasdaq 100. All right, so for the Nasdaq 100, right, what we could see now is coming very close to the all-time high at 13,906 level slash 14,030 level. Now is hovering above, also already surpassed the 50-day moving average, now acting as a support close to 13,170. But still recall that last week we have a potential push up, so we're saying that, hey, yes, we could have see a potential short-term weekly push up towards the 13,006 slash 14,030 level. So give or take, it's now coming very close to the upper limit of the resistance that we have last week, also the top of this short-term ascending channel that is in place since 5th of March 2021 low. So what's concerned about me about is this ongoing upside momentum as compared to the S&P 500. This Nasdaq 100 start to shape a series of lower high. All right, on the S&P just now I shared with you, it didn't has a lower high, right? If you could go back to the S&P, let me go back again. Just a brief quick highlight over here. That do not notice that here high it still start to show higher high. I mean, there's no clear lower high at this moment in time, as the price continued to actually push higher last Friday. But what has been seen on the Nasdaq 100 is conversely is different. Prices pushes up higher, okay, higher high, but unfortunately, if you look at it, the RSI starts to shape a lower high. So what it means that it's kind of telling us that the upside momentum here is a bit lackluster or starts to ease off, you see. So what we have is that I'm now not so confident to play a further potential push up to actually break above 14,030. So with that, for this week, I rather kind of a turn neutral between 40,030 and 13,540. Unless we have a daily close above 14,030, that I could validate a further bullish scenario to actually target the next resistance level at 14,435 slash 14,460. All right, so that's we have for the US key major indices. Now moving on to the Asia now, which is Hong Kong 50, which is the Hang Seng Index. Okay, so for Hong Kong 50, right, no change. Kind of a trading sideway yet of last week shortened trading week due to the Easter and Qingming holidays in Hong Kong. So still holding above the 28,000 medium-term pivotal support level. So what we could see over here is more like a little bit of churning up towards the top of the range at 29,575, 13,140. So what's this level is actually the previous swing high of 12th of March 2021 and 18th of March 2021, and also a 61.8% Fibonacci retracement level that is taken from the previous 52-week high, which is at 18th of Feb 2021, all the way down to the low of here, which is the 25th of March. So you see 61.8% is 2957 and 76.4% at 30,140. So still looking for a potential push up to the top of this range resistance first. Then thereafter we got to see how the price action actually evolves from there on the Hong Kong 50. So still maintaining that potential bullish bias at least for this week. All right, now moving on to the German 30 index, or the DAX we call it. So okay, prior to the DAX, okay, pardon me, let me touch on one more Asia major indices, which is the Nikkei 225 or the Japan 225. We call it in our platform. So actually no much big changes on this Nikkei 225 or Japan 225. So still recall last week, right, we actually turned neutral. Why? Because if you look at the major uptrend that is taking place in 16 March 2020 low is still pretty much intact, except that after it hit this 30-year high at the high of this level here. Okay, let me share with you all. All right, at this level, which is 16th of Feb, which is at 30,716, it started to evolve in a pretty much choppy formation. That means price action actually hover between the 50-day moving average certain days it actually went below it, and certain week it actually last week it managed to actually recover above it, you see. So what we could see is that it's a kind of a impending symmetrical triangle configuration that kind of give me the lack of confidence to actually play up a further potential up move at this juncture. And also, right, if we were to go into the 4-hour chart, this is where I shared with you all last week, is that since this 16th of Feb 2021 high, it has been evolving in a kind of a 5 leg uh, alert wave, typical kind of a symmetrical triangle range configuration motion. That means we're talking about from the 16th of Feb all the way down to the 5th of March 20 low. This is the wave E. There we're doing a wave B, wave C, wave D, and now potentially a wave E, the fifth wave of this symmetrical triangle configuration motion that is in progress to kind of retest the 28,030 level before potentially we could see another leg of impulsive up move sequence. So I'll rather wait for the Japan 225 index to actually hover close the lower boundary of this symmetrical triangle configuration. Then from there onwards, we will actually be more in terms of probability wise, we could actually turn potential to have a potential bullish bias next week. So for this week, no change, allow it to actually play out in the potential last leg of this involving symmetrical triangle range configuration that is in place since 16 Feb 2020 high to actually potentially do a short-term push down close towards the lower boundary or the symmetrical triangle range support at 28,300. All right, so these are the two key levels to watch for this week on the Japan 225. So still neutral. Now moving on to the German 30 index. All right, so recall that the German 30 index last week we have a range upside target or resistance at 15,400 slash 15,530. So if this is a daily chart, if you were to see last week's high over here, it actually tested 15 shape a high of 15,328, which is printed on Tuesday itself. So give or take is very close to the upper limit of the resistance zone that we highlighted last week, which is 15,400 slash 15,530. So on the daily chart, all in all, right, nothing pretty scary here, just a series of small little candlestick pattern, no kind of a shooting star or a bearish engulfing formation. RSI, yes, it's overbought, but it hasn't hit the extreme overbought level at 85, which was kind of a printed previously at November, in the month of November 2017. So still a bit of room to actually maneuver potentially upward before testing this extreme overbought level. So yes, key support, right, key kind of a support zone right now is at 14,730 slash 14,400, which is this rising 50-day moving average. So what we have for this week's strategy on the 4-hour chart is I will actually tighten the key or I'll call it the key medium term pivotal support level to this 17,790. So what is 17,790 is actually this steeper ascending trendline support that is now coming in place since 26th of Feb 2021 low. And also if I were to share with you all the Fibonacci retracement level taken from this 26 Feb low all the way up to last Tuesday high, which is the current all-time high, it actually confluence close to the 23.6% retracement as well. So with that, this will be my key medium-term pivotal support level for this week. So looking for a further push up to actually test the next resistance at 15,530 slash 580, then thereafter followed by 16,070 level, which is defined by a confluence of Fibonacci expansion level as well. So with that, all in all, right, what we could see now is that the major stock indices are still pretty much healthy in terms of their longer term circular uptrend. So for the medium term perspective, no change on the S&P 500, still maintaining that bullish bias, except that I'm a bit cautious on the Nasdaq 100 due to the shorter term 4-hour bullish divergence as seen on the 4-hour RSI. So turning neutral this week on the Nasdaq 100 first, then we see how it goes from there. Then moving on to Asia. potentially see a short-term push-up in a kind of a rangy configuration, the top of the range for the Hong Kong 50 index. Then for the Japan 225, still awaiting for a potential final move leg down to actually complete this symmetrical triangle range configuration that is in place since mid of February this year. Then thereafter we could potentially turn bullish onwards. Then for the German 30 index, no change, still maintaining its bullish bias. We will tighten the key medium term pivotal support to this week to 14,790. So with that, have a great trading week ahead, and I see you all next in my next video.